Welcome to Insights. I'm Eric. Thanks for joining us again. I'm sitting outside here today. It's quite hot here in North America, and if the sound quality is not as good, I apologize for that, but we're doing the best we can. Trying to enjoy the day before the weather turns. But I did get a good question about the definition of cause building, how it relates and how it compares to a running correction. Are they the same? And what is the setup of the cause building within the grain markets, and how does that look? And I thought it was a good question because I use the words cause building all the time. Probably don't explain it too much. I'm going to show you where it's located, and I'm going to show you the tab you can click to study it, and we're going to talk about that in detail here. I don't want to do a really long review because it's not so easy to see out here, but I can pick up this stuff fairly well, and I just want to talk about these topics for the most part as quick as I can. So in terms of the grain market, we did a review earlier in the morning, and I think that explains the setup where we are in the three cycles. We don't have to review any of that. But what are we looking in terms of the position? The terms like cause building, jumping the creek, breaking the ice, those were all taken from Richard Wyckoff's work. He did a lot of work back in the late 1800s, early 1900s. As he was one of the more influential writers back in the time. His work, he was one of the guys that recognized the importance of cycles and some time work. But really, the breadth of his work was based on the study of force behind price and volume, and those were things that I picked up early. I incorporated some of his ideas in terms of descriptions of things, but other than that, a lot of things that I talk about in terms of cause building are really my own adaptations of my own ideas of energy and cycles and the simultaneous natures of price and time cycles. So let's take a look at that in particular, and let's talk about cause building. I put in the review or ahead of this in written terms what cause building and how it's defined. It's defined up in here. You click this link inside the blog, and you're going to get a Q&A. The cycle of accumulation is, you want to read that in particular. It's one of the links. Cause building has its own little section, and it talks about how you transfer energy, potential, kinetic energy. I use terms like transferring control from the weak hands to the strong hands. Those are all things that I've used. Cause building is another way of looking at it is consolidation. Technically, in the term of the evolution of the trade, or what we use or what I discuss, cause building is when the three time frames are out of alignment. That's the daily, weekly, monthly. The daily can be for example, could be down where the weekly and monthly can be up, and that would be a form of consolidation in a market that's entering cause building. It can also dip into the weekly trend and turn the weekly trend down against the primary trend. Again, there's different layers of cause building, different layers of consolidation. It can be thin, it can be deep. The whole point is to study cause building in terms of the energy builds and how the movement. And what we're looking at here is the consolidation that we see in the corn market. And it's going to look very similar to the beans market, and wheat will be a little bit different. But the computer is already recognizing cycles within them. Now I'm drawing them in here very crudely. The computer it keeps a database, and it's probably recognizing something of like this inside the trading cycle. Usually the trading cycle is about 12 to 10 days, roughly in that. I don't know what it is for corn. I'd have to go look it up, but this is approximately that particular cycle. If you look down, soybeans has got a similar cycle, even though the amplitude is slightly different. But this is traditional cause building or consolidation, where the market fails to make new highs, and it really doesn't make new lows either. Sometimes it can, and it can have a false breakdown, and sometimes it can have a false breakout. Those are all terms that if you click this link and study the cycle of accumulation and distribution, there's a chart in there, and it describes this sideways grinding action across. These fake breakout here's, or these like this, would be a false breakdown. Anything moves higher and then it fakes out and it doesn't break out, it's going to be a false breakout. The computer studies it in terms of volume as well as price. So volume is a part of this equation, just like Wyckoff used it. But I do include energy, and I find that energy is even more important than volume, or is just as important as volume. So when you're looking through a traditional cause building, in particular, if we take corn, and since they're all following very similar cycles, as price moves sideways from left to right on the screen as you look down on it, each dip energy should pick up. So and then it should release. So DI should increase bullish as we move down, and it should release as it goes bearish. But through the time, through this period, I'm going to call it a rectangle, the more energy builds as we move from left to right, the more likely the outcome is going to be it's going to jump the creek out of this consolidation. And then the next alignment of the 3 time frames, which we call the composite trend, will be a viable breakout. And that really is determined by energy and is determined by time. Cause building tends to last a certain amount of time. It's a function of how long the daily trend stays down and sometimes how long the weekly trend stays down while the primary trend stays up. You can have first degree cause building or second degree, which once you have 2 time frames coming down. But really, how long you're going to go into sideways action or corrective action really depends on how big the energy build gets. And we talked about this more, the energy for the grain markets this morning. You can see corn has a fairly sizable energy build, and soybeans is already statistically significant. So if we come down to this sideways action, we know that as the price has been dipping and moving inside the daily trend, energy is accumulated on a weekly basis. We know as we move from left to right, the energy build is actually intensifying, getting more and more bullish, which now that it's above 60 and 64 to be specific, that's enough energy, that's statistically concentrated. That's enough energy for it to jump the creek here. Now, to do that, we have to wait for confirmation in terms of the alignment of price and alignment of the 3 time frames in terms of price. We're still going to have to wait for, I don't know, the amount of weeks that it takes to get the composite trend back into alignment. It could happen somewhere around here, but the fact that the energy build is the largest that it's been so far here warrants that it's more likely to jump the creek at any point inside this consolidation at right this point. Now, corn is not quite as extent or quite as bullish of a build at 49. That's pretty high, but it's a little bit behind soybeans, so it doesn't have quite the energy transfer that's involved. So in terms of the discussion in terms of the blog site, or in my words, it's potential and kinetic energy. Potential energy represents the amount of energy that's available for price to jump the creek or break the ice, whereas kinetic is the recorded energy releasing process. I call that the dissipation. These are all different words, and it's all a lot of, you got to have a lot of science background to really appreciate this stuff. But it's, I mean, that's what I was trained in. So markets are just using the discipline that I learned when I was in school and studying itself, and transferring the ideas in terms of the physical observations that I was making in the financial markets. So in terms of corn and soybeans, this is traditional cause building. So the question becomes is, what is a running correction? A running correction is somewhat, to some degree, the wheat market. Now, wheat is bound inside trading range, but there's been an upward drift. And if we look, technically, this is what a running correction looks like. I labeled it here, but it's an upward drift of price within cycles. In each one of the dips, the energy build increases. But a running correction doesn't go sideways from left to right. It goes left to right with an upward drift. And that's in a market that's so strong that it actually can't come down in price or can't even grind sideways. Running corrections are quite rare, and it's a sign of strength, enormous strength, when you see them. Wheat doesn't have technically a full-blown running correction. We had a movement downwards, a cycle within, and then a false breakdown. But since then, especially if the market curls here and turns down and then comes back up, this is a sign of upward drift. So it's kind of a hybrid corrective or cause building phase, which is, it has the traditional properties of cause, but also a running correction within it. And now what we're looking for is that each one of the dips within the running correction, or even as price rises, we're looking for the energy build to materialize. Now, the problem with wheat is we have a minus 65 energy build and a negative DI2. So the invisible hand is leaning. It's trying to send it back down, trying to break this running correction and send it back down to the lower level. It is possible it will do that. If the market, if it fails to get it cleared out and knocked down to that level, and then the invisible hand changes its mind and says, I'm going to start to accumulate, say, even in this area, the running correction becomes a viable option, and then you start to see an energy build within it. It just powers it. It provides the potential energy to break and jump the ice, or jump the creek right here. It tried to do that right here, but this could be a false breakout. If we have some sort of energy build somewhere out in here, and then we do it again, this time might be enough and it will jump the creek, and this would be a running correction, and it just reinforces the statement I've been making that wheat is one of the stronger markets of the three grain markets at the moment. It's not represented in terms of the energy build. The energy build came down right here, and now it's released very quickly. But that happens when the price is rallied. It's rallied the most. Where these markets have failed to rally, wheat has actually rallied to a slightly higher high, and it has released that energy build rather quickly. That's a bullish indication, and it's not necessarily bearish in terms of the energy builds tend to quickly dissipate. Now, what wheat's going to be is it's going to be under a blocking dome if it jumps the creek here. And if it does do that, wheat's rally will slow down a bit, but that doesn't mean it's over, because the primary trend is still up, and now we're going to have the composite trend following along. That wheat desperately needs a reset. I mean, we talked about that this morning. The primary trend is up, but the week it's extended. The weekly a little bit. The weekly is definitely extended, and even the daily is, or the daily, which is down, which is up, is extended in terms of both almost time and it shows some sort of extension on the price cycle. So wheat needs a breather, and that's what the invisible hand is recognizing. That's probably why the DI is minus 65. So really what we're talking about when we say cause, and you can, cause building again is in this link here, and you can run through and read the definitions if you like. It's really a sideways action that really tries to transfer the energy builds, and that's what we're trying to accomplish here in the grain market. There are other markets that are better set up than the grain market is right now, but perhaps we'll have to wait for that a little bit, maybe a week or two, maybe a month. I mean, it's hard to say. So anyways, that's really the setup here. Now it's getting kind of windy out here, so I'm going to cut it short. So if you guys have any questions about the wheat market, let me know. If not, or not wheat market, the grain markets in general. But it looks like the cause building is continuing, and the wheat market itself is actually the strongest of the three. So thanks for watching, and we'll talk to you guys later.